trading at 56, the spot price. That's a new all-time high. And we're actually up, Elijah, $2.60, which is half of, I guess, 5. But yeah, $100, I don't think is out of the question. Back in 1979, I think silver was at $16 in November, and by even end of November, and by January 1980, it got up to 50, so it like tripled. So we could very easily double, and if we double, we're at 100.
In recent market action, silver has surged past $56, marking new all-time highs and signaling a dramatic shift in global supply dynamics. Commentator Mario Innecco notes that physical demand is now overwhelming the paper markets, reversing years in which leveraged trading dominated price discovery. He explains that this momentum began after silver decisively cleared the long-standing ceiling near $35, accelerating into a near-vertical climb as sovereign buyers, major institutions, and large private investors moved heavily into physical inventory. Unlike the 2021 silver squeeze, which stalled around $30, today's rally is being driven by buyers who are no longer interested in ETFs or futures exposure. They want allocated metal, and they want it immediately. According to Innecco, this shift is reinforced by a wave of strategic purchasing from outside the West. Central banks across the Gulf region, Russia, China, South Korea, Turkey, and India are acquiring silver directly, with some countries now treating it as a monetary asset rather than an industrial commodity. Dubai has even introduced tokenized silver instruments backed by multi-ton bars, while India has approved the use of silver as collateral for loans, two developments that would have been unthinkable only a year ago. At the same time, global shortages, visible backwardation, and record withdrawals from London vaults highlight a structural tightening unlike anything seen in previous cycles. Innecco argues that this new environment, where real metal must exist before contracts can be written, is reshaping global pricing power and pulling the market into territory with no historical precedent. With spot prices hovering near $56 and achieving the highest monthly close in history, Innecco warns that the market is entering a technically significant phase. The long-term teacup formation dating back to 1980 has now broken decisively above its upper rim around $51, a move he describes as a generational breakout. He believes silver's historical pattern, such as its tripling in late 1979, suggests that sharp multi-dollar daily moves are not only possible, but increasingly likely. While he avoids making absolute statements, Innecco concludes that the probability of silver falling back below $50 has diminished substantially, and the market's behavior indicates that this breakout may only be the beginning of a much larger secular advance. Now, we present the clips from Mario Innecco's interview. Before we continue, please subscribe to our channel and activate the bell icon to receive timely updates. Thank you, and enjoy the video.
I think basically physical demand for silver is overwhelming the paper market. And 3.5 years ago, a little more, we had the silver squeeze movement. And that didn't really go anywhere. We got to 30, and then there was a lid there, mainly because the big sovereign buyers of physical silver that we're seeing now, and also big investors, they weren't interested in silver. They might have been buying ETFs, but they weren't interested in physical. But now everything's changed. And I think that's why silver is picking up. And also silver has still to catch up with gold, because don't forget, gold in 1980 got to just below 900, and now we are here at I think 4,200 as we speak. And silver got to like around 50 in 1980, and it's just moving above 50 now. So I think, since mid-October, there's been a correction, and a lot of people weren't too sure if silver was going to make it back up. But I think this is very significant that we made it back up and we've made a new high. Yeah, gold is lagging, but I'm not concerned about that. I think if you look at the gold-silver ratio, it's breaking down, which is a good thing. Back in the 70s and also in 2011, towards the end of the bull market, silver really caught up and went higher. And I'm not saying the bull market is near an end. Precious metals, I think, is far from over. But yeah, usually it's good to see silver leading the way. For me, the most important aspect is that actually central banks like in the Middle East, like the Gulf Cooperation central banks, even Turkey, Russia, China, they're all starting to buy physical silver. And I've even heard that Dubai now, they want to they're creating a tokenized silver instrument. Basically, they want to make silver kind of money again, which is quite amazing. I don't know if you saw the other day, Dubai, they showed this silver bar. It was 1,971 kilos. So almost two tons. They're really into silver. We saw that India is going to allow individuals and companies to use silver as collateral for money, for loans, excuse me. So yeah, up until 6 months ago, the reason people gave for silver underperforming gold was that, while central banks only buy gold, they never buy silver. But that's completely changing, and I think that's huge. And I think the silver price, right now we are like in what one would call terra incognita, like we're in territory we don't know. It's never been there before. But yeah, I think there's such huge potential for silver now that central banks are getting involved. And unfortunately, in the West, very few people are aware of this stuff. I mean, you and I are aware because we listen to you listen to me, I listen to other people in the gold and silver space. But the mainstream is like completely like not really aware of it yet. Maybe the fact that like Tucker Carlson has started his own precious metals dealer might help wake people up a little bit. He's got a big following. So yeah, that's the major thing. These countries outside the West, yeah, they're going back to silver. Even Korea, South Korea, the central bank there has started buying gold again, but also silver. And we also seen, Elijah, that the United States and China, they've put silver on their critical minerals list. So everyone wants to get silver before those two giants get a lot more. Back in from 05 to 08, even though I was a futures and options broker for government bonds, we had a client that traded a lot of silver. And so I was involved in that, and I could remember $5 days when silver was between $15 and $20. So I don't see why we shouldn't see $5 days again, especially now that we are above 50. And I mean, as we speak here, we're just trading at 56, the spot price. That's a new all-time high. And we're actually up, Elijah, $2.60. Which is half of, I guess, 5. But yeah, $100, I don't think it's out of the question. Back in 1979, I think silver was at $16 in November, and by even end of November, and by January 1980, it got up to 50. So it like tripled. So we could very easily double. And if we double, we're at 100.
Mario Innecco stresses that even if silver reaches the $50 range, investors should avoid becoming emotionally reactive to rapid price swings or feeling compelled to buy impulsively. He maintains that precious metals primarily serve as long-term financial insurance rather than short-term trading instruments, making disciplined accumulation far more important than finding a perfect entry point. For newcomers, He recommends a steady, incremental approach to purchasing rather than deploying all capital at once, especially as volatility is likely to increase and premiums may surge if retail demand intensifies. Innecco also advises keeping product choices practical. Whether acquiring coins, bars, or constitutional silver, securing the lowest possible premium is the priority during times of tightening supply. Looking ahead, Innecco believes the silver market is entering a transformative phase as central banks quietly begin adding physical silver to their reserves, an almost unprecedented development in the modern financial era. He points to momentum building in the Middle East and Asia, where new silver-based financial structures are emerging, including Dubai's early adoption of tokenized silver platforms that could restore the metal's role as a functional medium of exchange. This trend hints at the gradual re-emergence of a dual-metal monetary system reminiscent of pre-1870s frameworks. According to Innecco, the revival of sovereign interest in silver, combined with expanding monetary applications and growing global liquidity use cases, signals a historic structural shift that much of the West has yet to recognize.
I think people should remain calm. I try to stay even keel. Even on the way up, back in the beginning of October, the market went crazy on the way up, especially gold. I try to stay calm and not too excited. And the same thing when it corrected. Same thing now. But for people who want to get involved in silver, I would say don't go in all at once. I don't, if you have a certain amount of dollars, don't go and buy all of it in silver. Maybe dollar cost average and don't worry about the price, because if you do it regularly, you're going to get a period when the price is corrected down. So yeah, I think that's the best thing to do. But it's getting, I think we could see next week silver be very explosive to the upside. We could see a lot of volatility as well. And I expect the premiums to go higher for silver, because the dealers, when it's very volatile, they need to have a wider bid and offer spread to protect their profitability. So that's the only thing I would say right now. I heard that from Andy Scheckman last week. I interviewed him. He said the constitutional or junk silver is, it's almost trading at spot, which is unusual. I'm not really picky. I just try to get the best deal in silver. And I think as long as you have silver, that's fine. I think everything will do well. Here in the UK, I like buying the coins of the realm, like the 1 ounce silver Britannias, and I have some like pre-1920 sterling silver coins as well. Those are they're like the junk silver for the UK. And in the US, I would stick to silver eagles and pre-65 coinage. And I guess if you have millions, of course, you might want to think about bars, silver bars, like 5,000 ounce bars and stuff like that. But for the small investors, stick to the coins and maybe some 100-gram bars and stuff like that. I mean, it's very surprising for me, and but I think maybe these central banks are waking up to the fact that yes, it's good to have gold as more of a reserve asset, but silver will provide more liquidity as well in terms of a day-to-day asset or money or currency to use for the general public. And I see that. I think it's Ronan Manley and Bullion Star. I'm not sure if it's together with Bullion Star. They're helping develop this token in Dubai, silver-backed token. So I'm not sure exactly yet what that's going to be like. But you could go to Dubai and use silver as currency. So I think, yeah, and that helps liquidity because you're not just focused on gold. You have like a bimetallic standard. That's how it used to be in the U.S. prior to 1873. So I think this is truly historic, and it's going to catch a lot of people by surprise because we've been told that silver will never be money again or be used again, that you need to be into Bitcoin and cryptos. But maybe going back is what it's all about, going back to real money. I mean, Elijah, the name dollar comes from a silver coin called the Spanish dollar, and that comes from the Joachim's thaler coin. In Spanish, plata, which is silver, also means money. In French, argent means silver, means money. So, and we've only been, let's say, separated from silver as money for about 50, 60 years. I mean, in the 60s, a lot of countries still use silver as money and coinage.
As global demand for silver intensifies, a convergence of factors is setting the stage for a potential dramatic repricing of the metal. Physical availability is increasingly constrained as central banks, sovereign wealth funds, and industrial buyers accumulate stockpiles, reducing the volume accessible for traditional market participants. At the same time, innovations in silver-based financial instruments, such as tokenized silver platforms emerging in Asia and the Middle East, are enhancing the metal's liquidity and utility beyond mere investment. These developments suggest that current pricing benchmarks, historically influenced by paper markets, may become less relevant, with tangible ownership and verified physical supply taking precedence in determining value. In such an environment, the $50 level may no longer represent a ceiling, but rather a starting point, while a rise toward $100 becomes increasingly plausible as supply-demand imbalances intensify. Looking ahead, silver's trajectory will be shaped not only by investor behavior, but also by geopolitical and economic pressures that drive sovereign accumulation. Heightened industrial demand for technology applications, combined with renewed interest in silver as a quasi-monetary asset, could accelerate upward price movements in ways that paper-driven speculation cannot replicate. Will silver's resurgence be a gradual ascent reflecting long-term fundamentals, or could a rapid breakout redefine its historical trajectory in the coming year? Let us know what you think in the comments, and if this video offered new insight, don't forget to like, share, and subscribe for more updates on this unfolding monetary revolution. Thanks for watching.